Hola guys, que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's go ahead and look at Bitcoin. I hope everyone's having a blessed day. There's some things that we need to look at. I want to try to keep this video as brief as possible and to the point, just like you know how I like to do it, yet at the same time go over some pretty important stuff. So everyone's wondering what now? We've touched the 400 simple moving average. We've been talking about that now for, you know, I've been, I don't know, it's been 2 weeks now, right? And I told you Bitcoin was going down to 98 G's. So we had that yesterday, and so the big question is where to now. So on this chart here, I have two charts. I have the Bitcoin price action chart, okay, on a daily, with the death cross and the golden cross marked off, okay? Now, again, this is between the 200 and the 400, simple moving average crossover, with the bottoms here and this redistribution range circled. This is of crucial importance here, this redistribution range that took place back in March of 2022, because as I'm going to show you in this video, we have a fractal. Okay? And what's more is this redistribution range right here from March of 2022 came after a bearish divergence in the price action. You see these two ranges here. This top, this cycle top here in October of 21 made an all-time high. So technically it is a rising, you know, we have a series of higher highs if we're looking at the macro as far as cycle tops go. But then we shift down here to the cumulative value days destroyed, and we see that that we have a divergence. We have lower highs. Now, each one of these tops here, you see that the tops coincide with the time frame. But whereas this one is going up, this is going down. We talked about this yesterday in the video about the bearish divergence found between price action and the cumulative value days destroyed. If you remember, cumulative value days destroyed isn't price action. This chart on the bottom here does not track price action. This tracks the movements of coins that have been hodled. And what I mean by coins, I mean by positions, hodled positions by whales. Okay, serious money, serious muscle that moves, the movers and the shakers of the markets. And so once a coin is moved, whether it be from a wallet to an exchange or from an exchange to a wallet, it's reflected in these waves, whether up or down. And then once that position has been moved, those days are reset or destroyed. So that's basically in a nutshell what the CVDD means, the cumulative value days destroyed. So we see here that the if we see price action rising like we see here in this series of cycle tops, and here, which pertains to us today, this is the current, we're also seeing higher highs in price action, but on the cumulative value days destroyed, or the CVDD, we're seeing lowering highs. So this is meaning that long-term coins, hodled positions, are being moved to exchanges and being exited. So this is basically smart money getting out of the game. Okay, smart money getting out of the game, and when smart money gets out of the game, they need to unload their bags. Right, these are bags that they bought low and they're selling high. And so for every sale, you need a buyer. Well, guess who's buying? All right, well, retail's buying, right? Weak hands are buying, and strong hands are selling. Dumb money is buying, smart money is selling. Okay, you get it, right? It's not rocket science. Okay, so this is what this signifies. When price action is rising and the CVDD is lowering, we have what's called a divergence, and it's a bearish divergence. Now, going back 4 years, we see that this happened here in this series of cycle tops. And so we had a distribution, and then we had this area here where we came back down to the zero line, beneath the zero line on the CVDD chart. We see the same thing here. We had this distribution. That would be this area here, this range, and then we had this next higher range, which created this new all-time high that we had back in January of this year. That was this, and we talked about this yesterday. These tops were congruent, but then we had this third. Okay, and this is the latest all-time high that we had at 126. I think it was 126 or 121 or 100. Yeah, whatever it was. Okay, and so, but we see that it is significantly lower than the previous top. So we have bearish divergence here, and now the price has gone back down. Now, we talked about this. We've been going on this for like 2 or 3 weeks now. We've come back down and we've touched the 400 simple moving average, just like we did here, and we got pretty darn close here. And this signified the bottoms, the local bottoms in the CVDD. So if you had bought one in this green area, then you would have been all right, right? And you could have made a YouTube video, and people would have been hailing you as a analyst wizard, when really you're just going off these two, the synergy between these two charts. And so here again, we've ducked under this micro trend resistance line that is in divergence to the price action microtrend, and we're heading back down to this historical bottom area. I've drawn it out. This is like 5 years worth of like local bottoms here, not counting this area here. Now as you can see, the greener the CVD is, the more ripe it is to buy, and the redder it is up here is the more danger that that is being imposed upon the markets, as far as like sellers stepping in and creating what we talked about yesterday, that unsustainable high. Another high here. It's still unsustainable. And then remember, we had this gigantic sell-off, and this was all precipitated by the divergence. Well, we see something like that here now. The only difference is that whereas this third top, as it were, it wasn't really a top. It turned out to be more of a shoulder from this. If you want to talk about this second head and shoulder top here, this cycle top, it turned out to be a shoulder, whereas this one where we're at is actually higher than the cycle top preceding it. So that's the dilemma that we're faced with now. But nonetheless, it came out of a divergence. So now our prerogative as analysts is to know whether or not we're going to put up another leg from here. It certainly seems like we're heading back down to this historical bottom area, which, if you notice, all of these green rectangles occurred along the 400, or in the pocket between the 400 and the 200 simple moving averages, even going all the way back here at 4 or 5 years past. The only one that didn't was this. Turned out to be a redistribution range, where shortly thereafter we got the, like, if we do and go back down, we've already touched the 400, but now we want to know whether or not this is going to be a distribution, or if we're going to put up another all-time high. And something that could help us out is to look more in depth at this area. This area is of great interest because this could be what we're heading into, walking into right here, because even here we see that it touched the 400, and it went back up. We had some consolidation, but ultimately it was never able to prevail back through it and reach those previous highs. Instead, we got the death cross, and we came back down and we went to the bottom of the ocean. So it would behoove us to look more in detail of this area here and kind of scrutinize it forensically. And so fortunately, there is a fractal of that area. Now this is that area we were just looking at. Okay, this is going back to 2021, 2022, and we have a pretty close fractal of what transpired in the price action. If you've been following this channel from where we if you remember, we basically tracked this diamond, this like double top distribution all the way down. Now, I missed the bottom here. I thought it was going to keep going, but I was going off another fractal that was invalidated, and to my detriment, I wasn't using this 400 moving average guardrail. But we're going to be doing that. We're going to be doing things differently. So you live and you learn, right? And you pick yourself up and you keep going and you learn from your mistakes. And so that's what I intend on doing. So subscribe to this channel if you're not subscribed, and we're just going to keep you as safe as we can with daily updates such as this, if this has been beneficial to you so far. So all right, going back to the fractals. We see the diamond distribution. This is from earlier this year. This is this previous all-time high of 109 Gs. That coincides with this four top here, buying climax, UT, up thrust after distribution, and then we have the LPSY. This is a traditional distribution, Wyckoff distribution number one right here. And then we came down here into this bottom, and that's this area where we again touched the 400 simple moving average. Okay, and so here I sourced the anchored VWAP, which is the ice line, to it on both fractals, so we could see the interplay between the 200 simple moving average, the anchored VWAP, to the terminal shakeout of this accumulation range on both fractals, and the 400 simple moving average, which is like the underbelly beneath all of the price action, all the way up to the current sign of weakness where we are here. We topped out here. These were kind of like different tops that we've had. We had this reaccumulation range. That's here where the shakeout went down. In the one that we just had, the shakeout went down to the ice. It wasn't able to prevail through the ice, and it bounced. And so that was the key that was going to make another leg up, which it did, culminating in the buying climax of the top that we just had. Here it went down beneath it, and had another shakeout area that was beneath the anchored VWAP and the 200 simple moving average, but then it went right back up to the buying climax. So we're like tracking these two, okay? Because hopefully this fractal is going to kind of clue us in as to what we may be able to expect to happen with the current price action where we find ourselves, especially going back to the cumulative value days destroyed chart in the synergy that it has with the traditional Bitcoin price action chart, and we're seeing that right here. So we're coming out of a divergence, like we came out of a divergence here. So this is of crucial importance to us, and it could clue us in on some of the things to look for. So if we're going to have kind of like a repeat. So if we've indeed topped out here, these are some of the things that we can look for. We've already touched the 400. We came back down from this UTAD. Now this distribution was a little different. We didn't have an upthrust, really, if you want to call this an upthrust. We had the buying climax secondary test and the upthrust after distribution, whereas here we had a little more consolidation, and we had some more touches upon the anchored VWAP. Here the price kind of stayed really high above the VWAP, and then we had the last point of supply that would be here, and that brought us back down. And then you see how this area that we had only came down to 103 Gs after the UTAD. This one 4 years ago went all the way back and touched the 400. So this one had a propensity already that, of the sellers, or aka smart money, or the composite operator, was pretty clear. The writing was on the wall much earlier on, I would say, because then it had that bounce, but it was never able to get back over the ice line. Whereas here, after the UTAD, we came back to the ice and it bounced off the ice. So we had more price action lingering above the 400 than here, where everything seems to have hugged or mingled right above the 400. We have more of a gap here this year. So that's one kind of premonition that we could go off of that. It may not be as bearish as it was 4 years ago. And then also another thing that we need to look at is we touched indeed the 400 simple moving average, but here 4 years ago we fell right through it, whereas we had a substantial bounce here. It looks like we're making our way back up, not like, the volume nonetheless in the demand is decreasing. See how it's decreasing here as it's going up. So we have more of kind of like a divergence, and this is on the 10-hour, whereas here it fell straight through and then tried to get back up over the 400 and was unable to. It had 1, 2, 3.5, 4 attempts before it was promptly rejected, and then shortly thereafter we got the dreaded death cross. Okay, also notice how the anchored VWAP, the 200 simple moving average, and the 400 moving average are all seeming to converge over this consolidation range. It doesn't look like accumulation here. This is more of sellers selling as high as they can, and then like dumping the price, bringing it back up. It's kind of like going through the ringer over and over again with dumb money, shaking them out. That's what the increased spread sort of typifies. Whereas if it's accumulation, we see supply getting more and more scarce as it gets sucked up, and as supply gets sucked up, demand increases, right? Supply and demand 101. The less supply, the greater demand. And so, but here we see the supply increasing with these massive drop-offs. And so that was a clue that this was potentially going to be a redistribution range. So we haven't had any action beneath the 400 yet. This is something that we're looking for. It looks like it's going to make another attempt, but look at how the 200 and the anchored VWAP kind of converged after it touched the 400. The price action touched the 400. Now, if we go back, let's pretend like we didn't know what happened. We're basically where we are now. We would kind of see the same thing, the 200 and the ice line getting closer and closer, meeting on this second LPSY here as the gap closes in. See how it's already closed in here with us, but here it took a little bit longer to close in after we had the touchdown on the 400. So yeah, the 400, we still have a big gap. 4 years ago, the 400 was coming up pretty quickly to join the party. We're was going to have this convergence here, and so that's a sign that selling pressure is really stepping up, and that the bias is turning bearish very, very quickly in a macro sense. We don't really see the 400 rushing up yet. So that's something else we need to look at. We do have the big supply spike coming here from the dump, from the failure to rally past the 200 and the anchored VWAP. We had this big volume spike in supply come in, signifying that this is a legit, this is legit bear power. We kind of look here, excuse me. We kind of look here and see where we got something identical in this area where we had this like rejection, and that would, I guess, coincide with this larger than average supply spike here that came in on January 20th, 2022. So afterwards, we're going back to today, we're seeing decreasing demand. If the bulls are going to do something here, we would expect much larger effort in demand, in buying power, to kind of take the game back up to this area. We kind of saw the same thing. We had a big demand spike, but then right afterwards we had decreasing demand back then as well. But again, all this took place beneath the 400 simple moving average, which we have yet to do in our current cycle. Let's go ahead. I'm going to end this video pretty soon. Let's just go ahead and look at the fear and greed index. It's at 23. That's extreme fear. So the market sentiment is not bullish. It is. There's a lot of fear, and BlackRock is moving their bags to the exchange. They're unloading, which is reflected here. You see how, remember how we talked about this with the cumulative value days destroyed, the hodl bags from the whales, from institutional money and overflow brings, when they're moving their bags off the exchange, then the days get destroyed and the price resets, but it shows a decrease in the value. So that kind of contributes to what we're seeing here as the price begins to make its way back to this bottom line here, where we've seen the historic bottoms. So it just remains to be seen whether or not once we reach there, if it goes down lower here. And this line here I drew out incidentally on the cumulative value days destroyed. This was where the positions hit this line where we've got the death cross. So this coincides with the death cross on the price action here, where the 200 crossed beneath the 400, and this over here as well. It seems to be along this golden line here, and this is where we saw the death cross, where the sun rose, and we started the macro bull market. So keep an eye on that as well. If we go under the historic market lows here, and the 400 simple moving average is basically runs parallel with this long shaded rectangle here, above which we've seen the historic cycle bottoms within the prevailing uptrend. So, and then here, last one, Bitcoin bulls last stand 95K. So 95K is like what everyone's gunning for right now. It's the area of interest, and that's because if we fall beneath 95K, that's gonna be well beneath the 400 at that point. So that's going to be somewhere 95 is going to be somewhere underneath. It's going to be right around. Yeah, it's going to be right under. See if I can get a pen so I could show you. So this is important, guys. It's going to be this line here. This has been a major support line. I'm kind of drawing it loosely, but you kind of get the gist of it. If we fall beneath this line, this is 95. If we fall beneath it, this is what they're talking about. This is what they're alluding to. If we fall beneath this and then fail to get back up into it and start bouncing off, it turns into resistance, then we're going to have this sort of scenario. And this is decidedly bearish. This is when it's like, oh my goodness, we could be actually entering into a macro bear market. And so we know what happened after that. It was down, 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 where the institutions took a profit from all of this partying way up at the top, which we've had now for three cycles already within this parent bull trend. So, all right, guys, that's about it. Hopefully I got some information. I know this video went on a little longer than I thought. God bless you guys. And thank you for tuning in. Again, none of what you've seen here, none of what you've heard here is financial advice. This is for educational use only. Hopefully you get educated with this. If you haven't subscribed, if this kind of technical analysis interests you, go ahead, subscribe, like, drop a line, let me know, encourage me to keep doing this. I'm going to try to keep doing this every day, updating day by day by day, except for maybe Saturdays and Sundays. You know, I spend Sundays with the Lord and with my family, and like Saturdays I'm usually out and about doing stuff with my kids. So, but during the week, yeah, subscribe, and you won't miss any more updates. And we'll watch this together. We'll navigate these waters together and stay on top of Bitcoin. Step by step, move by move, day by day, tracking it, looking into what the market makers are doing, reading the Wyckoff, reading the volume spread analysis, going off all this stuff, counting the Elliott waves if we have to, and just gauging it all between different charts and different methods of gauging buying pressure versus selling pressure versus volume versus herd mentality, all that good stuff. That basically encapsulates my trading and my technical analysis philosophy in a nutshell. All right, guys, that's enough for me. God bless you. We'll talk to you soon. Adios. Bye-bye. Love you. Bye-bye.